tax changes and tax situations as it relates to estates. This is Brad with probateresource.com. We are actually a all-inclusive resource for people going through the probate process that need their questions answered around all things related to probate, not just the legal standpoint. And oh, by the way, we're also a real estate solutions company. We buy properties for cash, and we have a fantastic network of real estate agents all across the country that we work with that are probate and inheritance specialists. So if you have a property that you've inherited and you want to sell, give us a call. We'd love to chat with you about it. But today I want to talk about tax changes and tax situations as it relates to estates. First of all, I want to preface this that I am not an attorney and I am not a CPA. Please do not take what I say as legal advice or tax advice. I highly suggest that you talk to a probate attorney if you need legal assistance with your specific probate case, or if you need help with your specific tax situation. I highly suggest you consult with a tax professional in your area to discuss your unique situation. If you'd like a referral to one of our fantastic vendors that we work with that are either tax professionals or attorneys across the U.S., we'd be happy to refer you to one of those. All right, so let's get into it today. Today, I'm going to review the IRS. I'm going to go on just irs.gov, and we're going to review the FAQs. There have been a few changes to 2024, and I wanted to discuss these a little bit. So let's go into it here. I am on irs.gov's website. So everything I'm telling you, I'm literally just reading it straight off of the website. So let's go into it here. These are the FAQs in regards to estate taxes. Estate tax questions are probably one of our most asked questions to us. So let's go about this. Am I required to file an estate tax return? Okay, so an estate tax return must be filed if the gross estate, that's the total amount of the assets in the estate, of the decedent who is a U.S. citizen or resident, increased by the decedent's adjusted taxable gifts and tax exemption, or specific gift tax exemption. If it's valued more than the filing threshold for the year of the taxes, then you would need to file for the return. So let's jump to 2024 here and let's look at it. So I mentioned in some other videos that the estate tax exemption amount for 2023 was over $12 million. Now it's over $13 million. So as of 2024, the estate tax exemption amount is basically anything below $13,610,000. An estate tax return also must be filed if the estate elects to transfer any of the deceased spousal unused exclusions amount to a surviving spouse, regardless of the size of the gross estate or the amount of the adjustable gifts. The election to transfer a DSUE amount to a surviving spouse is known as the portability election. An estate tax return may need to be filed for a decedent who was a non-resident and not a U.S. citizen if the decedent had U.S. situated assets. So basically, if you're not a citizen but you do have assets here in the U.S. All right, so let's close that out. We're going to go here to, I need to change something on a tax return that's already been filed. Well, you just need to fill out this Form 706 or 706NA, enter supplemental information, include the statement as to what's changed, and attach a copy of pages 1, 2, 3, and 4 of the original 706 or 706NA. And then there's a mailing address here. You can see this link. Okay, so how do I elect portability of the deceased spousal unused exclusion amount to benefit the surviving spouse? In order to elect portability of the DSUE for the benefit of the surviving spouse, the estate representative must file a tax return, Form 706, and the return must be filed timely. Timely there. What does timely mean? I don't know. It's kind of vague, right? But timely is just, as soon as you can. The due date of the estate tax return is 9 months after the decedent's date of death. However, the estate's representative may request an extension of time to file for the return for up to 6 months. An automatic 6-month extension of time to file the return is available to all estates, including those filing solely to elect portability by filing Form 4768 on or before the due date of the estate tax return. So, what does that mean? More forms. Let's go here. All right. So if I missed a due date for the filing of the estate tax return, can I get an extension? And if you missed the due date, if the estate did not file within the 9 months or within 15 months of the decedent's date of death, the availability of an extension to elect portability of the DSUE depends on whether the estate has a filing requirement based on the filing threshold provided under 6018A. Blah, 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 blah. I'm not going to read the rest of this for the sake of time. All right, let's go into how does the basic exclusion amount apply in 2026 if I make large gifts before 2026? So individuals taking advantage of the increased gift tax exclusion amount in effect from 2018 to 2025 will not be adversely impacted after 2025 when the exclusion amount is scheduled to drop to pre-2018 levels. When can I expect an estate tax closing letter? Final regulations. There's a new user fee of $67. Estate tax closing letter became effective October 28, 2021. User fee. For information regarding all estate tax, please see frequently asked questions on the estate tax closing letter. All right. Let's see here. How do I make a payment after the extension is requested but before filing the return? So to make an electronic payment, you just click on this, how do I make an electronic payment? You can also mail in a paper check to Internal Revenue Service, this address here in Ogden, Utah. How do I make an electronic payment? You can do those straight on IRS's website. They have it's the EFTPS, or you can send a wire transfer. I've used the EFTPS to pay my taxes before. This essentially, they just draft the money out of your bank account. I'm not going to go into all the details here, but you can go through all this and read this yourself. All right, so let's get to more important questions here. What is included in the estate? The gross estate of the decedent consists of accounting of everything you own or have certain interests in at the date of the death. The fair market value of these items is used, not necessarily what you paid for them or what their values were when you acquired them. I've done some other videos about what's called a step up in basis, so go check those out. The total of all these items is your gross estate. The includable property may consist of cash, securities, real estate, insurance, trust, annuities, business interests, and other assets. Please keep in mind that the gross estate will likely include non-probate as well as the probate property. Okay, I own a half interest in a farm or building business with my brother, sister, or friend. What is included? Depending on how your half interest is held and treated, you would probably include only half its value in your gross estate. However, many other factors influence that answer, so you would need to visit with a tax or legal professional. Like I mentioned earlier, taxes are complicated, and your specific tax situation is different than my specific tax situation is different from my next door neighbor's specific tax situation. You need to consult with a tax professional to discuss your specific tax situation. All right, what is excluded from the estate? Generally, the gross estate does not include property owned solely by the decedent's spouse or other individuals. Lifetime gifts that are compatible, no powers or control over the gifts are retained, are not included in the gross estate, but taxable gifts are used in the computation of estate tax. Life estates given to the decedent by others in which the decedent has no further control or power at the date of the death are not included. Okay, so what deductions are available to reduce the estate tax? You have marital deductions, charitable deductions, mortgages and debt, administrative expenses, losses during the estate administration. But again, you need to consult a tax professional and have them look at your deductions specifically. All right, what other information do I need to include? You need copies of the death certificate, decedent's will and other trust, copies of appraisals, copies of relevant documents regarding the litigation involving the estate, documents of any unusual items. So what other information do I need to include with the return? Copies of the decedent's will, copies of appraisals, copy of relevant documents, documentation of any unusual items. If you are attaching the 706, right at the top of each form, 709. This previously filed as an exhibit, form 706. Oh, here we go. This is a really good question. What is fair market value? Fair market value is defined as the fair market value is the price at which the property would change hands between a willing buyer and a willing seller, neither being under any compulsion to buy or sell, both having reasonable knowledge of relevant facts. The fair market value of a particular item or property, including in the decedent's gross estate, is not to be determined by a forced sale price, nor is the market value of an item of property to be determined by the sale price of the item in a market other than in which such item is commonly sold to the public, taking into account the location of the item wherever appropriate. So you basically, in what some might call an arm's length transaction, what would that item likely sell for between two buyers and sellers that are maybe, third parties that don't kind of understand the dynamics, right? They're sort of disinterested third parties. What would that go through? So, all right. So, what about the value of my business or farm? Updated November 21st, 2023. Generally, the fair market value owned by the decedents are included in the gross estate. These are farm IRCs. So 2024 is $1.39 million. Okay. All right. What do I do? What if I do not have everything ready for filing by the due date? Again, earlier, you can request an extension for up to 6 months. However, the correct amount of tax is still due by the due date, and any interest accrued on any amounts still owed by the due date are not paid at that time. So it's kind of the same as like filing your normal tax return. You can file for an extension of filing, but if there's any taxes owed, you still have to pay those taxes as of that date. So who should I hire to represent me and file and prepare the return? The Internal Revenue Service cannot make recommendations about specific individuals, but there are several factors to consider. How complex is the estate? By the time most states reach $1 million, there is usually some complexity involved. How large is the estate? And in what condition are the decedent's records? How many beneficiaries are there, and are they cooperative? Do I need an estate tax professional? With these questions in mind, it's a good idea to discuss the matter with several estate tax professionals and ask about how much experience they have had and ask for referrals. So here, this is the IRS telling you their recommendations as to who you should hire to file your estate taxes. So let's jump into it real quick. The Internal Revenue Service cannot make recommendations about specific individuals, but there are several factors to consider. How complex is the estate? By the time most estates reach $1 million, there's usually some complexity involved, right? How large is the estate? In what condition are the decedent's records, right? If there's some ambiguity, some bad records, that makes it a little bit more difficult. How many beneficiaries are there, and are they cooperative? That's a huge point there. Are the beneficiaries cooperative? We run into that all the time. I've got other videos about that. How many beneficiaries are there? The more there are, the more complicated it is. You should probably consult a tax professional. And do I need an estate tax professional? That's a good question to ask. And you can also go in most areas and you can look for CPAs and enrolled agents. And sometimes there are actually also tax attorneys who are also CPAs at the same time. So those are some good examples here. But you can read more about this on the IRS's website. But this is what they say about hiring the right person to do your estate taxes. Do I have to talk to the IRS during an examination? No, you do not have to be present unless they need to ask specific questions. What if I disagree with the examination proposals? You may have the rights and appeals. If you disagree, see Publication 1 and Publication 5. What happens if I sell property that I have inherited? Here we go. All right. So what does the IRS say about what happens if I sell property that I have inherited? Well, this is straight from the IRS website here. The sale of such property is usually considered the sale of a capital asset and may be subject to capital gains or loss treatment. However, IRC 1014 provides that the basis of a property acquired from the decedent is its fair market value at the date of the death. I've done another video about this. This is called a step up in basis. So there is usually little or no gain to account for if the sale occurs soon after the date of the death. That's the key word there, soon after the date of the death, because remember, it steps up at the date of the death to whatever the fair market value is at that time. So if you sell it shortly thereafter, usually there's not much of a gain at all. Remember, these rules are different for determining the basis of a property received as a lifetime gift. If you need to discharge a property from a federal estate tax lien, submit Form 442, blah, 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 blah. Okay, cool. How pro rata unified credit pursuant to treaty, international form. These are all the international forms. Will my same-sex spouse be considered for surviving spouse for the purposes of marital tax deductions for estate taxes? For federal tax purposes, the term spouse, husband and wife, includes individuals of the same sex who are lawfully married under the laws of the state whose laws authorize the marriage of two individuals of the same sex and who remain married. So I'm not going to read the rest of this, but you can go read that for yourself. So that is that. That is what the IRS has to say on FAQs about estate taxes. So if you need more information from this, you can go to the irs.gov website and read all of this yourself. I wanted to do this in a video today. Hopefully it helps you out. So again, if you have a property that you've inherited and you would like to sell it, we'd be happy to make you a cash offer on that property. We make it as easy as possible. We buy properties for cash all over the US. We also have a fantastic network of real estate agents who are probate and inheritance specialists that could list the property for you if you want to go that route. But again, we'll buy it straight for cash. So thanks for checking out this video today. Again, I am Brad with probateresource.com. Have a nice day. Bye-bye.